Hi guys, today we will discuss gold futures daily chart. It's a CFD. Now, as I discussed earlier in the weekly chart, the longer term level is most secure. So for newbies, for people who are new to trading, always try to trade on the longer run. But for what I call medium to experienced traders who wants to trade daily or intraday chart, for them, I will discuss daily chart today. Now, if I just zoom in, you can see right here, this is what I call a good example. If I zoom in further to show you, these three candles were falling off. Okay, it was going down. Now on this day, gold closed at 1128.80 and the next day it opened higher. Now this open of red candle is 1131.20. But next day it opened at 1130.90 and closed above this open at 1131.90. Now whenever it does that, it acts as an engulfing bullish candle. How? Because this candle is eating this red candle, so it's like showing a bullish trend line. Now if I place the up mark here and move ahead, you will see that it will again open higher and close a bit lower. But if you look at the trend, it's like moving higher and higher. It again moves higher, 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 and higher. The point of view is to check what is happening on the engulfing bearish trend line. Now, if you remember, this is the bullish, this is the doji candle, and this is the morning star, one of the morning star pattern. Now, what this pattern tells us that the growth or the push higher is stopping. Now, although this is true, but always remember, reversal patterns work absolutely correct when the next candle after them follows them. Otherwise, people can create divergence or they can create traps. Example, this pattern means that it is going down. But if I will put in more money or more stocks by order or more buy order for gold futures, then automatically the price will open higher. Once it opens higher, then this pattern does not exist. This pattern is nullified. Because the point is, the next day candle should be following it, not opening higher or not opening there and closing higher. It should be following it. If it is not, then it's a trap. So always wait for confirmation. Don't just jump in, because this is the mistake that all new traders make. You see a pattern, you just jump out. Remember, things do move out, but it takes time. You need a third candle to say, okay, I'm going down. Now this pattern, this body, represents a doji body going down. Absolutely correct. But there is a catch. Wait for the next day. If you will consider it as a doji, gravestone doji, then you will consider it as bullish. But remember, gravestone doji have an extreme power on the downside, not on the upside. Now, what do I mean by that? What I mean is, if this doji candle would have occurred here, then it would have gained 10 times more importance. Now it's occurring here. So it's least important. Reason? Its power is magnified on the down run, not on the up run. Up run, everyone is already bullish. So what do you expect? If the price goes lower, then people won't buy, because they're already bullish from the lower side, from this bottom. They're already bullish. So this candle doesn't offer that that push, that power. So always wait for the next candle. Now if we move further, we see that the price continues to rise, and then here, what I call the big game changer. Whenever you see something like this, there is definitely a problem. Now, This will happen due to some extreme bad news in stock or futures or CFD or whatever financial instrument you are trading. It will be due to extreme bad news, what I call rumor or like real news, whatever it is. Once you see this kind of opening lower and closing a bit higher, then remember there is a small gap, because here the previous candle had an extreme low and then it opened lower, so there is no gap in this scenario. But it opened lower and it like broke this open of this green candle, so it means it's going down. If otherwise, let's presume this there is no shadow and there is a huge gap, then again we will consider gap filling up, but the bullish momentum will have a serious blow. See, in a bullish momentum it never opens lower. You can have this kind of a thing, rising candles, rising star, but you don't have this thing, because in a bullish trend everyone is buying, so you can expect gaps on the upside but not on the lower side. Now if the price falls, the first or major support will be within this gap. So if we are expecting it to fall from 1200, then we are expecting it to go at least till 1167 and can even go further down. But the point is to understand how the game works. Now it comes back up but falls. See, you can see it did came back up and would have made you sure that the instructor is wrong and you are on the right side. I totally believe in what you are saying. If I were standing on your side, I would have said the same thing. But the concept is this should not have happened. And if it has happened, then there is either some really bad news in the market that you don't know, or the insiders know something that we don't know. And then just look at it. It opened again lower. Why on earth is it opening lower? Now it's again a gap. See? Right here there was no gap because there was a spike down, a shadow down on this candle. But right here there is a gap. So it's confusing it out. But it goes lower and boom, it comes back up higher, filling the gap. But if you look at it further, understanding the game plan, then this is the first high, this is the second high, and it can go and on touch the third high. Now, sorry, I didn't place the icon right here. Now, what I will call you to buy here, but be vigilant, be smart, because we are buying here because we believe the market will rise higher, but there is a catch. Always remember that catch. What the catch is? That it can move to a third high and fall off. Now it has moved higher. Now once it closes higher, it's a bull run. Now if you remember, right here I told you that it might come down to fill this gap. It didn't. Now how did we know that it won't? Number one is this gap. It left a gap on the top side. It should not, because it left the gap, so the price needed to come to fill the gap. Now if you remember, it's extremely bullish till this point. On this point we were believing the change in trend, but as it was bullish and it went again, left a gap for it to fill, so again buying came in just to fill the gap. But the common investors, the retail investors, didn't knew that the buying was coming to fill in the gap. They bought more and basically raised the stakes higher. And once they raised the stakes higher, hedge funds, mutual funds, and other top players would have jumped in again. Why not? And it rises higher. And right here, it opened lower, came back. Now this is also not a good sign. Always remember, in a bull run, opening lower is bad. But it's not a sell signal. I repeat, it's not a sell signal. It's just bad. It's something to search for. Why it has happened? What will happen next? See, it opened again lower. Now once it opened lower, That's like hell break loose. Why? Because first day it opened lower, it came back up. Okay, it's coming back up. But the closing of this green candle is still lower than this red candle. Bad. Why on earth will it like close lower? If there was buying, then they should buy a bit more to eat this red candle to make it a bull run, but they didn't. The next day it opened lower, and this opening lower is again below this open of this green candle, because this green candle is like far more important than these three red candles. Its open is far more like close to the bull run than these three candles. So remember, once you see this kind of a thing, get out. Especially on this third day opening lower. It should never open lower on a high. First day it opened lower, came back up. So the came back up was a good sign. So we thought, okay, it might be a fluke. But the next day it again opened lower. That was it. That was the out movement. This open was the out movement. And now it's again saying buy. So buy. Now, all these things usually happen to make the changes on the weekly level. Now, if I zoom out, you can see this is the first high, this is the second high. So on the weekly high, you will be seeing two highs. That's the thing. Now, if you move further, it rises higher, stops. Now, once it stops, we know it's making a like double top. That's not a good sign. So you will be considering to get out and waiting for the mark. But there is again a catch. The second catch is these three candles. Now if you remember bearish 3 method formation or bullish 3 method formation, in bullish 3 method formation there was a big red candle. This is not big, this is medium. And then there were three candles that were like within the body of this green candle. Now these are not red candles, but they're doing the same purpose. Now remember, when I tell you it should be red, then don't consider it to be red always. Because in modern times, people have learned them and they try to manipulate them. And manipulation best technique is to do this. These are not red. So people will get confused. But remember that in a 3 method bullish formation, you need a green candle next. Once that happens, it's extremely bullish. So they are like fooling people by not letting them know that this is a bullish 3 method formation, the most powerful pattern of all. But if you look at it further, the fourth candle is disastrous. And it turns everything around. But on the fifth method, it moves up. It's a Mabuza candle, which is one of the bullish candles of all. Now, what really happened here? This is a key question. What really happened here is, once people started to buy, some major investor knew that okay, he cannot jump in right now. It's too late. So he started shorting it or selling it, just to make sure that people get confused. Once they will get confused, he will buy from them. It's a simple technique to make people fool. But this candle shows that it's on track to move higher. So be vigilant. And that's exactly what happens. Boom, boom, boom. But it stops and now it's telling you again it's a dangerous sign. So you should be vigilant. It falls off, falls off, falls off, falls off, falls off, falls off. Now, the thing to note, as we always discuss, if you would have bought it, this was your stop loss moment. Once it broke it, you are out. Once it opened lower, you are out. It should not open lower on the rise. And this long-legged candle, which is extremely bullish candle, it won't work here. Because as I discussed earlier, it works on the bottom, not on the top. On the top, it's a trap. See, everything that is bullish needs to form on the bottom. except bullish engulfing candle. Bullish engulfing candle, Marbusa candle, they are bullish everywhere. Reason? It's their sheer force. But opening lower, that's the extreme bad thing. In a bullish day, in a bullish trend, everyone is bullish. So why will the candle open lower? Once everyone is bullish, they are always like pitching the prices higher. They are always buying on the higher price. If it is trading at 1840 and 1845, then I will try to pitch 1850 for 10,000 shares or 10,000 futures contract. Reason? Because I know I cannot find those 10,000 contract at 1845. I need to pitch higher so that I can grab them earlier. So everyone is pitching higher. Once everyone is pitching higher, then why will the price fall? Why will it open lower? That doesn't make sense. And if it does make sense, the sense is there is something wrong. Now, in a market, you don't search for what is wrong. You search for what is happening. Because the wrong thing will eventually come out. You'll get to know, okay, this has happened. But if you'll wait for the answers, you will lose money. And the best way to approach it is to follow the candlesticks. If they're telling you there is something wrong, get out. Don't sit and don't waste money. If you look at it, it fell further down and now it's starting to move higher, but we will wait. Now this is a bullish thing. Now if you remember, that's a long upper wick, long upper shadow. That's huge. That's usually considered an extremely bearish candle. Extremely bearish. Why? Because if it is moving higher, then this should not happen. And if it is happening, there is something wrong. But it is still, the body of the candle is still closed higher to eat this candle. That means that someone bought it all and then let the price drop so that he can buy it next day as well. That's what I call traps. Boom! Look at it. It opened higher. Now that's what I call traps. So remember, if you're seeing something on the wrong side, then follow the body of the candle. Because these are the traps that nowadays are created. If you would have moved 15 years down the road into the 1990s, you would not have found so many of these traps. Now there are too many traps. So the people who have the skill to read the charts will be able to move around these traps. Otherwise, all retail investors will fall into the trap. Because in the trading, what will they see? They will see rise of 224 and then close of 1203. They won't remember the open because no one remembers the open. And that means a huge fall. Not a good moment. A bad thing. Now, if we move further higher, it moves higher, higher, and higher. But there is a catch. Just zoom out. What do you see? It's at the same moment. This is the first high, this is the second high. Not a good thing. Never a good thing. You need the price to run up. Why is it again opening lower? What do I mean by opening lower? Let me show you. Right here it closed higher. Next day it opened lower and moved a bit lower. Third day again it opened lower. But they were all within this body of the candle. Okay, no problem. This is the bullish two method formation. Two method formation is also bullish. But again it's opening lower. See, these two candles have opened lower. Although they have moved up, but that's not a good thing. Why on earth is it moving lower? And this red candle proves that there is something definitely wrong. Why? Because all these candles that I discussed are at the highest moment here. All these candles highs were on the highest moment, on the close of this green candle. And these highs were also near this highest point. So it should not have stopped here. It should have just zoomed up. If it is stopping, there is a problem. But we will follow the candlestick to confirm what is happening. Now this is the second high moment. Now if you are buying, Remember, there is a high chance of losses at this moment, but the losses will be the normal ones, not extreme. So remember that. Boom, it goes lower. And this is your sell signal, and it also tells you that there is something definitely wrong. It's in a box, and boxes are never good for traders. Boom, it moves up. Now it's bullish and it will move further higher because it has now crossed the previous highs and it's in a new territory. So in a new territory means good bullish time. Now in the next chapter I will discuss intraday charts so that I can show you how to trade gold futures with candlestick and how they help you make good money. Thank you.